Have you ever thought about investing but stopped because you felt you didn't have enough money? Maybe you've heard people talk about investing thousands of dollars, buying multiple stocks, or building huge portfolios, and you assumed investing just isn't for you yet. This is one of the biggest myths in personal finance. Today, we're going to answer a simple but powerful question. How much money do you actually need to start investing? And the answer might surprise you. The truth is, investing is no longer something only wealthy people can do. Years ago, you needed large amounts of money, expensive advisors, and complicated accounts just to get started. But today, investing has become accessible to almost anyone. You don't need thousands of dollars. You don't even need hundreds to begin learning how investing works. What you really need is consistency, time, and the right expectations. Let's start with the biggest misconception. Many beginners believe they must wait until they have a large lump sum before investing. They think starting small won't make a difference. But investing is not about how much you start with, it's about how early you start. Time is the most powerful factor in investing because of compound growth. Compound growth means your money earns returns, and then those returns start earning returns too. Over time, this creates a snowball effect where growth accelerates. For example, imagine investing $100. At first, the growth feels small. Maybe after a year, you only see a modest gain. That doesn't feel exciting, but what most people don't realize is that the early years are building momentum. The real power appears later, when growth starts stacking on top of previous growth. This is why someone who starts investing small amounts early often ends up ahead of someone who waits years to invest a larger amount. So the real question isn't, how much do I need? It's, when should I begin? And the answer is, as soon as possible. Now let's talk about realistic starting amounts. Many brokerages today allow you to start investing with very small deposits. In Canada, you can open accounts that let you buy ETFs or stocks with relatively low amounts of money. You might start with $50. You might start with $100. Some people even begin smaller just to learn the process. The amount itself matters less than building the habit. Think of investing like going to the gym. The first workout doesn't transform your body, but consistent workouts over months and years create results. Investing works the same way. Your first investment is not about becoming rich immediately. It's about learning how markets move, understanding emotions, and building confidence. Because emotions are actually one of the biggest challenges investors face. When markets go up, people feel excited and want to invest more. When markets go down, people feel fear and want to stop investing altogether. Starting with smaller amounts helps you learn how to handle these emotions without taking large risks. You are essentially training yourself to become a long-term investor. Another important idea is automation. Instead of trying to invest a large amount once, many successful investors invest smaller amounts regularly. This is often called dollar cost averaging. It simply means investing the same amount consistently over time, regardless of whether the market is up or down. Sometimes you buy when prices are higher. Sometimes you buy when prices are lower. Over time, this averages out your purchase price and removes the pressure of trying to perfectly time the market. And timing the market is something even professionals struggle to do consistently. Consistency usually beats perfect timing. Let's also talk about expectations. If you invest $100, you should not expect it to turn into thousands overnight. Investing is not a lottery ticket. It is a long-term wealth building process. Small investments grow slowly at first, but they grow faster as time passes. The goal is not quick wins. The goal is sustainable growth. Many people underestimate how powerful small, regular investments can become over long periods. Imagine investing $100 every month instead of waiting until you have a large sum saved. Over years, those contributions add up significantly, and compound growth begins working in your favor. The earlier you start, the more time your money has to grow. Another benefit of starting small is that mistakes become inexpensive lessons. Every investor makes mistakes. Everyone buys something that underperforms at some point. Everyone experiences market drops. Learning these lessons with smaller amounts is far less stressful than learning them later with large investments. You gain experience while protecting yourself. Now, you might still wonder, is there an ideal starting number? The honest answer is that the ideal amount is whatever you can invest consistently without affecting your daily financial stability. You should not invest money you need for rent, bills, or emergencies. Building an emergency fund and managing debt are important foundations before investing heavily. Investing works best when you can leave your money untouched for the long term. This allows market growth and compounding to do their job. So instead of asking, "Do I have enough money?" try asking a better question. What amount can I invest regularly without stress? For some people, that might be $50 a month. For others, it might be $200. Both approaches can work if they are consistent. Consistency turns small beginnings into meaningful progress. And here's something encouraging. Almost every experienced investor wishes they had started earlier, not with more money, but with more time. Time in the market is usually more important than the size of the first investment. Starting small removes the biggest barrier, which is hesitation. Once you make your first investment, investing stops feeling intimidating. It becomes familiar. You begin learning naturally through experience. And that first step is often the hardest one. So how much money do you really need to start investing? Enough to begin learning, enough to stay consistent, enough to take action today instead of waiting for a perfect moment that may never come. Because investing is less about the size of your first step and more about the direction you choose to move. Start small, stay consistent, think long term, and let time do the heavy lifting. Thanks for watching. Happy investing. Please subscribe for more content.